Hey guys, this is Chris Mincola over at the Mincola Group with West USA Realty, and I'm joined today by Evan Einhorn with Modern Home Lending. How you doing, Evan?
Good. How about you?
I'm doing great. Thanks for joining us. Thanks for taking the time to help us out here, figure out what is going on.
Yeah, yeah. I mean, it's been a fun few years to say the least. Um,
Yeah.
I joke around before real estate. I would get bored with the job every couple of years. Let me tell you, real estate and mortgages is not boring. So I don't.
Now,
If it was boring, I don't know if I'd be here
yeah,
today.
there's so many layers to it, right?
Yeah.
Well, hey, first of all, I just wanted to let everybody know that we are um, trying to solve problems, right? Or issues that people are running into or think that they're running into without really checking in on it, right? Because you don't know what you don't know. So I wanted to talk to Evan today and pick his brain a little bit about the market in general, but some solutions to these high interest rates or high cost in home buying these days. Okay, so Evan, I think why don't we start off with let's see, we're doing rates or assumables first.
We can talk about just where rates are today.
Yeah,
So I will share my screen here. I'm going to pull up Mortgage News Daily. This is a great third-party website. It tracks rates. These are
yeah,
not our rates, but it does give a good idea. Can you see it?
yep, looks
Okay,
good.
perfect. Um, so we'll see FHA rates and then we'll see conventional rates, just to give you a good idea of kind of where things are at. Again, almost always we're lower. So feel free to reach out to me and I can give you an exact quote. But just to give you an idea, FHA rates right now, the average is pretty much right there at that 6.48 range compared to, the end of April, early May, it was hovering right around 7. So in a monthly payment, just to give you an idea, 0.5% is on a $500,000 loan is roughly 150, $160 a month.
Right.
So, and then going even further back to October and November, they were almost 1 full% higher. So almost $300 more a month. So we
Wow.
do have some clients that we even helped last fall that were able to get a good deal on the home. Last fall was a little slower, not necessarily lower values, but a little slower. So some people were able to get some deals. And then now we're actually refinancing them from, you know, saving them half to 1%, which is kind of nice. So that's FHA. Conventional, rates hit pretty much 8%, in October, which was nuts.
Right.
End of April, early May, they were mid sevens. A lot of people were kind of a little frustrated, but thankfully we've gotten some relief with just inflation reports, unemployment reports, all that kind of good stuff. So now the average conventional interest rate is really close to that 7 even. So, and again, 0.5% on a $500,000 loans, 150, 160 a month. 1% is like a few $100 a month. So it's not nothing. So
Right. So with your with but for what you do, you're a mortgage broker. So these are the national average rates. So for you, you're basically your rate, everybody's got the same rates, but the pricing's different, correct? Because
right,
you're a mortgage
right,
broker shopping the best wholesale rates.
right. So someone with good credit, they might be anywhere between a quarter and 0.5% lower than this. You know, without getting into too specifics. I mean, we have some clients that are under 6% on FHA.
Right.
Which is nice. So I always give this as a good idea to track rates. Or, you know, ever since 2020, I've never seen us be above this for someone with good credit. And
Yeah.
then when I say good credit, I should put that in context because on FHA, 640 versus 800 is usually only like a quarter difference in interest rate. So, if you have a
Yeah.
640 credit score, don't think, I have bad credit, I'm going to get a super high rate.
Yeah.
But, you know, another thing we've been talking about too are 20-year mortgages. Unfortunately, they don't have charts here, but for some reason, the 20-year mortgage um, is pricing really well lately. So we've been comparing apples to apples that the 20-year mortgage can be about 0.5% cheaper. And on a $500,000 loan that is almost 3 grand a year, and
Wow.
then your monthly payment is about $300 more expensive, but you're saving a lot in interest. So for clients that they can afford the payment but don't really want to pay the high rate, it's worth looking at a 20-year mortgage right now.
Yeah,
That's something we compare with clients because it's 10 years sooner and it's only an extra couple $100 a month more. And then maybe at some point, if and when rates drop, you switch to a 15-year or 30-year, and we look at options later.
that'd be great. And this year, it seems like from what I read on Housing Wire, our splits are better, like with the 10-year yield, which kind of drives this.
Hmm.
So uh, when things do kind of come down for us eventually, that's going to make things even better as long as those
Right.
splits stay the same. But so what about, okay, so just in general, you're able to get people lower rates than what they're seeing on TV or
Right.
maybe from a retail
It,
lender, let's say.
it could vary. I mean, I've seen on FHAVA, we've been 1% lower than average sometimes. Sometimes we're
Yeah,
0.5% lower. So, it depends on the market and demand and a lot of other factors, but, the base rate is always good. And you know, it's just a good trend line to see, hey, where's everyone at?
right.
But as a broker, you're right. We shop over 30 lenders. There's some of our lenders that are not competitive on conventional loans. There's some of our lenders that are not competitive on FHA, not on VA. So we
Sure.
shop for every specific loan, and it could vary week to week. We have
Yeah.
lenders that were super competitive last week. They got bombarded with loans starting, and they increased their rates this week. And
Yeah.
now they're off the charts high. They're higher than this. So
Right.
obviously, we're not sending them loans.
Yeah.
Um, so that's the nice thing about being a broker. About shopping around is actually seeing, hey, based on today's rates, who's going to get you the best deal for your specific situation. So
Right. And for VA, you guys really kill it, I think.
yeah, FHA,
So to speak.
VA,
Yeah. Yeah.
veterans. Unfortunately, a lot of retail and big lenders that advertise on TV, they charge a lot more money and kind of pay for your advertising. We're mostly referral based, so yeah, nothing against those big companies, but just different business model that we're not spending millions of
Right.
dollars on advertising. We don't have a big fancy office. We have a nice office, but it's not a big fancy office.
Yeah.
We're not, going and advertising at big events. So our goal is, let's help our clients get the best service, and super competitive rates.
Yeah. So on that, since we're talking about rates, do you want to talk about assumable or buy downs that
Yeah,
uh
yeah. Um, I want to talk about there's two kind of ways that we're coaching clients, kind of like you said, finding solutions. You know,
yeah.
um, let's talk about buy downs. Um, I have a whole separate video on buy downs, and I know we've talked about it before, but we are seeing, if something's been on the market a couple weeks, I know you've seen it, I've seen it, that there's the possibility of negotiating a buy down.
Yeah.
Um, what a
Yeah, we're
temporary, yeah,
yeah, I was gonna just say we're seeing that right now. Cromford, as a matter of fact, put a thing out just over 40% on concessions, are doing concessions on sales. I would say that's probably a little bit more prevalent in the West Valley than hotter seller areas like Chandler or Gilbert, or the East Side. But definitely opportunities out there for buyers right now to get. More importantly, yeah, you can get price reductions, but more importantly, these buy down rates actually will save you a ton more money, right?
yep. So
Yeah,
we have one right now. I think it's in Goodyear. Um, First time home buyer buying a $400,000 home. We were able to get about 15,000 from the seller, negotiated,
yeah,
and kind of like you were saying, 40% concession. So what that means is roughly about 4 out of 10 sellers are helping the buyer pay for some extra cost. Now, probably even more would, but not everyone wants it or asks for it,
right.
but four
Yeah.
out of 10 are actually getting it.
All
Um,
realtors are not, the same negotiators,
yeah,
right?
exactly. Not all realtors ask for it, not all negotiate. Some people will negotiate on price, even though it might help them more financially from a payment perspective,
Yeah,
negotiate concessions. So, one thing that, for example, in that one example, $15,000, we're actually able to help use that $15,000 to help get that client a rate that's 3% lower her first year,
Yeah.
2% lower her second year, 1% lower her third year. And if for some reason she doesn't refinance and rates don't drop, then on the fourth year, she still had her full fixed rate,
Yeah.
which is a little lower than this average. So it's still not an adjustable rate. The nice thing I like about the temporary buy down is, let's say someone's getting a 6.5% rate, just throwing a number out there. She's literally could be starting at a 3.5% rate her first year, and then 4.5, and then 5.5, and then after 3 full years, on the fourth full year, then she might be up to 6.5. But
Yeah.
if rates do drop in the first 3 years, she actually gets a refund for any money left over. So I like it because it doesn't really go to waste, and it helps make sure your first few years you're budgeting. And just like rent goes up, it kind of gives you a way, if you're used to renting, maybe with rental increases, like it's a way to kind of inch your way up into the monthly payment.
Yeah.
And again, there's a lot of different buy downs. There's buy downs that give you 1% lower for your first 2 years. There's, where you might not be able to negotiate as much. So there's a lot of different options that when our clients are making an offer, I know we work with, you know, our agents and great negotiators like you to see, hey, what makes sense for the buyer and what should we negotiate? What's the goal that's going to help them the most?
Right. And then when they get through that period of the 1, 2, or 3 years, and that ends, it's fixed at that point. And like
Yep.
you said, that money that the seller paid, not you, but the seller paid, um, that is sitting in an escrow account where then, like you said, you don't have to pay out of pocket. Well, normally it's getting rolled in if you're doing a refinance, right? You're not paying out of pocket, but you're not paying at all really
Right.
to buy unless it's beyond the normal buy down rate at that point to refinance or something like that maybe, but
Right.
it basically pays for it at
Yeah. I
that
mean,
point.
I already, speaking to this example, I had someone that got I don't know what their rate was. I think it was low sevens back in November. And he had a 1.0 buy down, which is just 1% lower for the first year. And we recently refinanced him, and he actually got a check back for the second half of the year, which
Wow.
was a larger loan, like 700,000. So he got over $3,000 check back for
Yeah.
what he didn't use, and then we refinanced him at no cost to that lower rate anyway. So there's, it does give you the flexibility. If rates drop, you can get a refund. If rates don't drop, you still end up with a fixed rate, and you at least can work your way into your payment for 1, 2, or 3 years. So
That's great. Yeah.
yeah.
Yeah, it really works well for our clients and stuff. So guys, it's not mumbo jumbo, or I'll put it that way. It's really a way to save yourself some money now, get into the buying a home now. Even if you already own a home, to move on, we can do that. It's not like you have to be a first time home buyer to get a buy down.
Right.
So yeah.
Yeah, I mean,
Uh,
we have clients that, they have a $1,500 mortgage now, and they might not want to jump up to like a $3,000 mortgage, which sounds
right.
scary, but realistically, prices have gone up on everything, and wages have
Yeah.
too, thankfully. Maybe not quite as much
Right.
as they should have, but like wages have gone
Yeah.
up. Um, that we've done some buy downs that, hey, maybe instead of jumping straight from 1,500 to $3,000, you can jump from 1,500 to 2,400, then 2,600, then 2,800, then $3,000. And that's
Right.
assuming rates don't drop. If rates do drop, even better,
Yeah.
then we'll be able to capture that.
And right now,
So
your average rent is about 2,400 a month for the whole
yeah,
valley. Obviously, east side's probably a little bit more, but
right,
the average across the board for the valley is 2,400,
right.
which is crazy. So,
Now,
go ahead.
this last piece we want to talk about, I'm most excited about this.
Yeah.
And that's saying something because we're always happy to coach and talk to clients, but technically we're not involved because it has to deal with the seller's mortgage. And, so it's not a new mortgage.
Right.
Um, I know, Chris, I know you're excited about this too.
Yeah. Very.
So,
Yeah.
um, so I'm going to exit this real quick, and I'm basically going to show
So, guys,
this
this
map.
is something. This is something that we can do a search for in the MLS, where the properties are listed. And we can
Yep.
find these properties basically that other people are selling, okay?
Yep.
Or
And this is
maybe
a
they might want to, sell or whatever. But they're able to see if their mortgage is assumable, okay?
yep.
Go ahead.
Oh yeah. I mean, this is a screenshot of the system that Chris has access to.
Yeah,
Um, it basically will show you. So if you're looking to buy, now it's not for someone that doesn't have like 3 or 4 or 5% down. Ideally, you have a little more money down.
right,
So if you're looking to maybe sell a property and, maybe go from a 3 to $500,000 home, but you don't want to pay that higher rate, you might actually consider looking only at assumable mortgages. Now, is there about 18,000 homes for sale? I think I haven't
yeah,
checked lately in the
yeah.
Phoenix area.
It kind of hovers around at 18,000 mark right now. Yeah,
Right. So of the 18,000, you might have less than 10% that are assumable. However, you can afford so much more if you're willing to take over someone's rate. So like you literally, if you had the right amount of cash, you could literally take over someone's 2.25 rate. Now, you do have to come out of pocket with the down payment for the difference. So let's say you found a $500,000 home. They owe 400,000 on their current mortgage at a super low rate. You'd
right,
either have to come out of pocket with 100,000, or you would have to get a second mortgage for the difference. So there's a lot of creative ways out this, but this is huge for people that are looking to take over someone's low rates. They might be a little more flexible in their search. And I always tell people, because it's not, again, it might limit your search to less than 10% of the homes, but maybe you're looking at 500,000, but maybe because of this, you can look up to 600,000. So it might
right.
open up your search more because you can afford more. But this was just a quick search. This is not even all the homes of all the assumable mortgages that you could take over. These are all estimates because it's estimate based on the interest rate um, that you can take over. But anyone that bought a home late 2019 to early to mid 2022 likely has a rate that starts with a 2 or 3%.
Right.
And if it's FHA or VA, you're actually allowed to take over. VA, there's some nuance with the VA entitlement, but this on the screen is FHA only actually.
Okay.
So
So there's a lot more than
it's
that. Yeah.
yeah, I mean, if you're looking to keep that monthly payment low, it's a great way to help keep payments low. And here's the bonus kicker: investors are allowed to take these over. Again,
There
so
you go.
FHA does require at least 25% down. VA, you VA, if you're an investor, you can assume multiple of these. Now you do have to qualify. You do have to work with the servicer, like their current mortgage company to assume it and take it over.
Right.
And you do need to have some kind of down payment, but it is a great way to help keep your monthly payment low. And I know I get calls from investors saying, "Hey, I have 20% to put down. I'd like to cash flow." And unfortunately, if you put 20% today, you're not going to be making like $1,000 a month. Some cases
Yeah.
here, though, you will be making a lot of good money. So
Right.
um, it's worth taking a look.
Yeah.
Yeah.
Totally makes sense. Totally makes sense. Yeah,
Right.
guys, these are these are great opportunities. If someone's got the cash, someone is already, doing investing, somebody has equity in a property already, whether they sell it, maybe do a HELOC, talk to Evan about those options, to, put that extra money down in a difference, like he explained, great opportunities. And we could just plug this filter in and, send you a search.
Yep.
So,
Yep.
so yeah. Um, let's see. Did you have anything else on that you wanted to mention or on the rates? Okay.
Nothing on the rates or assumptions. I know there's some new down payment assistance programs. I mean, there's
Yeah.
always lots of changes. I feel like the last month there's been more though, you know. So
Yeah. Like I heard Home and Five just ran out of money. And
yeah,
they're more of a county program, and there's so many down payment assistance
right.
programs out there.
Yeah, I think we have 9 or 10 different programs. There's a
Yeah.
nationwide one that's getting a lot of publicity that if you're a first time home buyer, there is no income limit and you actually do get a good interest rate. That's a nice one. We've already closed one of those.
Wow.
Um,
Is that
so because a lot
conventional?
of it is conventional. It is conventional.
That's the UWM probably.
Yeah,
Yeah.
yeah, you can get 3% up to 15 grand, which is great. I mean, I had a client that had almost 3% down, but then they found a property that needed some work. So they didn't necessarily
Oh,
need the money, but hey, they were able to make an offer on a property that needed a new roof. And other
right.
buyers had probably skipped it because they need a new roof and some paint. They basically came out of pocket with nothing. They got almost all their earnest money back, so their deposit back. And then they used the
Wow.
cash they saved to work on the home. So
Yeah, I mean, I guess the biggest thing with the down payment assistance is, when you're getting money up front, nothing's free, but all the programs are a little different. Some are grants, some are silent seconds or whatever. And then you're usually paying higher fee, higher
right,
rate, that sort of thing.
right,
But it's a great option for someone who wants to get into the game that just is having trouble saving that money up, you know.
right.
um, because that is a nice option to get started. But yeah, so anything else, Evan, that you could share with us that you think would be important right now with the way things
I
are?
mean, at the
I
end of
think
the
these are
day,
some great solutions.
it is great solutions. Like if someone's wanting to move, there's definitely opportunities to make it happen and keep costs low. Um, and as far as is it a good or bad time to buy, I think that's so specific to the person, you know?
Right.
Like if you need to move or you're considering a move in the next couple of years, yeah, it is a good time to buy.
Yeah.
If you're happy with your home and you'd be making a lateral move, maybe it's not a good time to buy, but maybe you find an assumable mortgage, to make that work. So there's all these different caveats that I always say talk to the experts because there's a lot of I did a first time home buyer webinar with Housing Wire, and one of the
Yeah.
questions was like, where do people get this misinformation? And I'm like, there's a lot of bad information online that's like 80% accurate and then
Right.
20% wrong. So I always say reach out to the experts that's in it daily because, and I see some outdated stuff too. Like some information from the beginning of this year is already outdated.
Right.
Like things change
Definitely.
so quickly. Yeah.
Yeah, I mean, they thought there
So
was going to be 5 or 6 rate cuts this year, right? Earlier on, at
right,
least that's what the bond market was saying. But that was
right.
yeah. So guys, reach out to us, and let's get a conversation started. If you're not sure, that's fine. Evan can do just kind of a general conversation or a hard pull on your credit, or even what they call a soft pull, just to figure out kind of like a game plan going forward, and then we can kind of plug that into your search and show you the options. But you do have options out there right now, and I know because of everything you hear in the news, it sounds crazy right now with as expensive as everything is, but that's all the more reason to do it when other people aren't, because when rates do drop, it's going to be another crazed frenzy going on, and you're going to be hitting with all that other competition, and you'll have lost out on all that equity during that period of time, where right now, things are moving a little bit slower. We're kind of in a balanced normal market. We can ask for all these extra things from a seller, and get you some good deals. So with that, Evan, how do they reach out to you?
Yeah. You guys can either go to modernhomelending.com or you can text me on my personal business line. It's 602-456-2273. But again, you can find us on modernhomelending.com, all the information there. And now more than ever, I think it's important to talk to creative experts like us that are willing to look at your
Yeah.
situation and not just say, hey, you're qualified for this one loan program. Like that doesn't, while that might work, that's part of the reason why people are saying, there's not affordability. All these options we talked about
Yeah.
today help with all that. So,
And one other quick note too, this also helps us in selling your house, all these things, right? Because then we can
yep,
Evan can offer these things to buyers that come through or whatever, that they didn't even know existed. We've had a lot of people who think they have to rent, can't buy, all these different things. But anyway, so yeah, guys, you can always reach out to us at mincolagroup.com or 480-788-8569. And until next time, we are here for any questions, happy to help.
awesome.
Thanks for
Appreciate it.
helping us out, Evan.
Yeah, thank you. We'll see you.
Bye-bye.